As far as growth stage is concerned, we clearly look for the market opportunity, how big is the market, and then how a particular company is performing, the team dynamics. Do they have the potential to become a market leader in that particular space? So it's very, very important as to how quickly can they grow, because if the normal players in the same market space grow at certain size, these guys have to grow 3-4 times faster than the other players in the same market space. So whereas at a conceptual stage the metrics that we look for are very different, but at a growth stage we clearly look at potential companies that can become market leaders and grow really big. Yeah, so when we say growth stage, I don't want to confuse, right? Private equity is very different. Private equity is also called growth stage. But when we talk about our growth stage, we're talking about still venture capital. When early stage is really seed stage, below $1 million, anything between 1 crore to 5 crores is called as early stage. A Series A investment is more like 15-20 crores as the first investment, and then another 15-20 crores kind of follow on investment. So that's very different from private equity, because private equity would invest 200-300 crores only when companies have hundreds of crores of revenue. Even the growth stage that we talk about in the venture capital nomenclature, these companies have maybe 15-20 crores of revenues at best. So both at the early stage and growth stage, it's very important for us to roll up our sleeves and offer the mentorship, whether it is in terms of dissecting the business model, making introductions for potential hires, finding partners who can sell companies' products or service, or even helping them build the brand and also help them raise follow-on investments. So in the entire life cycle we need to be very active, and we stay very active. That's why we cannot be all things to all people. We have to be very focused in terms of particular sectors, and Ventureast is very well known for core competency in technology, consumer services, healthcare, and agri. So these are some of the sectors that Ventureast has humongous expertise. I always keep joking, and I was in Silicon Valley for 15 years before I moved to India, and I've been in venture capital now for 7 years, and I've seen some cycles, both kind of positive cycles as well as the troughs. During good times, I think everybody kind of they move down. I keep joking, during good times even hedge funds become angel investors, and during tough times even angels act like private equity funds, asking a lot of questions about the viability of a business model. So it is not very uncommon. At the end of the day, as I said earlier, your sector expertise and your ability to add value to the entrepreneur differentiates one venture fund from another fund. And also entrepreneurs are smart and they know how to select the right set of partners. It's just not money, they want intelligent money. So while this puts some pressure on the early stage investors, but these things are not very uncommon. These cycles are not very uncommon. Broadly, I'd say more than 10 investments in the sectors are technology, consumer services, healthcare, and Cleantech. Certainly digital health is one of the key focus areas. This whole mobility and kind of taking mobile services to the mass markets, cloud services to small medium enterprises, payments, these are some of the interesting sectors that we're looking at. Total under management is around $300 million, but every year you look at roughly $50-60 million kind of investment happening in any one particular year.